Good afternoon and welcome to the Morrows Monthly update for February. Markets started trading the month in negative territory. However, the pullback in risk assets was relatively short-lived and most markets moved back to new highs by month end. This was despite generally weaker than expected economic data and rising geopolitical tensions. The Australian equity market moved higher by around 4% during February as emerging market fears subsided. Most global equity markets were also higher, with the US and Europe both up 4%. Japan was relatively flat and emerging markets recovered some of their earlier year losses, with China trading around 1% higher. Global bond yields were flat to marginally higher as markets digested generally weaker than expected economic data. The benchmark US Treasury yield was trading at around 2.6% at month end. Most commodities also moved higher during the month, with gold prices up around 7% and oil prices 5% higher. The US dollar was lower relative to the euro and pound, but traded higher against the yen. The Australian dollar was higher by around 2% relative to the US dollar and was flat against the euro and the pound. US economic data was negative during the month, but much of this was blamed on bad weather. Manufacturing fell by its largest amount in 33 years, and trade data and retail sales also missed expectations. Employment growth was weaker than expected, but the unemployment rate did fall to 6.6%. Fourth quarter GDP growth was also revised lower. Economic data out of Europe was mixed, with both the manufacturing and services sectors picking up. However, retail sales and industrial production fell. Inflation was higher, but deflationary concerns remain, as do concerns over record high levels of unemployment. Data out of China generally missed expectations, with manufacturing hitting an 8-month low and the services sector hitting a 2.5-year low. Trade data was, however, stronger than expected. In Australia, manufacturing fell for the third month in a row. However, trade data and retail sales came in stronger than expected. Business confidence hit a 3-year high. However, the unemployment rate hit a 10-year high of 6%. At its March meeting, the RBA left interest rates on hold at 2.5%. The potential for a deeper correction in January and February was short-lived, with most markets moving back towards their recent highs by month end. We have seen that volatility in most asset classes has picked up recently, and we expect this to be a theme throughout 2014. Bigger picture, markets can continue to push higher on the back of supportive central bank policy actions and also a prolonged low interest rate environment. That being said, we're still in uncharted waters and macro risks remain. So it would be dangerous to assume that 2014 will be a one-way upward trend for investment markets. We thank you for taking the time to listen to this update, and we look forward to talking to you again next month.